What's up YouTube? Dougie Chong here. Welcome to today's episode where I have a special 2-for-1 episode where I'll be reviewing two popular ride-sharing companies, both Uber stock and Lyft. I'll start the video by showing some screenshots. I actually intended to make this video yesterday when Uber stock was about 30% lower. Since then it shot up about 30% in just one day. That goes to show you how crazy the stock market really is. Of course, I could have also just been randomly taking screenshots of Uber and Lyft, but come on, why would I do that? Alright, so let's start this video off by going over a quick overview of exactly what the business models of both Uber and Lyft are. I think many of you have used both Uber and Lyft, as Uber is the #1 in ride sharing and Lyft is the #2 in ride sharing in North America. But for those of you that don't know, it's essentially a competitor to taxis that works through an app. On the app, you kind of look for cars that are around and then you hail a car, and Uber and Lyft will use their proprietary algorithms to find the closest car to you, pick you up, and drive you to your destination. The ride is then charged to your credit card directly. There is no cash payments involved. You can choose to tip your Uber driver if you would like, and you are charged based on how long it took and how far the distance was. Probably the most important part of the business model of both Uber and Lyft is that they pioneered what is currently referred to as the gig economy. Essentially, all the Uber drivers that work for them and the Lyft drivers, they do not actually work for the company, they are just contractors. Now, because they classify their drivers as contractors, they save a lot of money because they do not have to pay a lot of benefits or certain hourly wages. The only way they got people to drive for them was by kind of appealing to their sense of having flexible hours. Maybe you have a car and you just want to earn some extra cash, so you kind of drive around just for a bit. I know California was in the works, or maybe even passed a law that is gonna force Uber to classify their drivers as employees, but that's not what this video is about. Just know that Uber's business model is very successful because they are very asset light. They do not have any taxis, they do not have any employees. They just contract it out, connect riders with drivers. Before I go any further, I just want to say that when I first started this channel, I wanted to review kind of safer stocks. I started with like Amazon, Facebook, surefire bets. And then I stumbled across Carnival Cruise Lines. This one has tanked a lot recently due to a once in 100 years event. Like, who could have seen this coronavirus situation coming? I still believe that that company can come up, but there is a very real chance that they will go bankrupt. Now, going on to Uber and Lyft, I want to mention that these are some of the more risky stocks that exist. So if you aren't able to handle a little bit of risk, maybe stocks like Uber and Lyft are not for you. There are plenty of other deals in the market right now from banks and airlines that are much safer bets than Uber and Lyft. But if you are willing to take on a little bit of risk, you can reap some great rewards. So now let's get into the comparison part of the video when we compare which is better, Uber or Lyft. For starters, Uber was the original company, Lyft came after, and Uber is located all across the world in various markets, whereas Lyft is only in North America. This wasn't exactly a huge win for Uber because in some markets they had to pull out because they simply couldn't compete with the local taxis. Now let's look at the price graphs for both Uber and Lyft. Lyft as a company went public about a year ago at about $80 a share. Now they are currently trading at around $20, which is about a 75% discount. Their market cap is about $6.3 billion, and they do not have a PE ratio because they are not a profitable company yet. It's important to note that neither Lyft nor Uber are profitable because they are kind of in a price war where they are lowering their prices to try to get market share from the competitor. They can easily become a profitable company if they're just willing to raise their price a little bit. Now looking at Uber's price chart, they went on the market around May of last year at around $41 a share, and now they are strangely at around the same price as Lyft of around $20 a share. Their market capitalization is about $35 billion, which is about 6 times as large as Lyft is. You might think that Uber's stock has not dropped as much as Lyft's stock because it's only about 50% drop compared to Lyft's 75%, but it's not exactly an apples to apples comparison. This is because Uber stock IPO'd after Lyft stock, and Lyft stock kinda tanked really rapidly as soon as it went public. This forced Uber to release their stock at a significantly lower rate than they originally planned. So both of these stocks have gone down a lot in recent months. This is because of the coronavirus, where a lot of rides were halted and stopped because they want to stop the spread of the coronavirus. However, just today, Uber's CEO released a statement that said they have plenty of cash to weather the storm. This caused Uber's stock to soar about 38% and Lyft stock to soar 28%. This was always visible by looking at the balance sheet, where you can see that Uber has $11.8 billion in cash and only about $5.6 billion of current liabilities. This is really good for a company like Uber because unlike airlines and cruise lines that have to pay employees, they do not pay their drivers when they do not drive. Looking at Lyft's balance sheet, again I get these balance sheets from Yahoo Finance. They only have about $358 million of cash and they have about $2.4 billion in current liabilities. So if I were to place a bet on which company would run out of cash first, I would say Lyft would run out of cash before Uber did. Before I mention if I think Uber and Lyft are buys, I'll note that I do own some Uber stock that I bought last year at about $26 and $30. I do not have any in my public trading account because they were bought before I even made this YouTube channel. And again, I am not a licensed financial advisor. Please consult a professional for legal trading advice. So for me personally, if Uber stock goes back to around that $15, $16 range, I will certainly be looking to buy more. Lyft on the other hand is just a little too risky for my risk profile. If you are willing to stomach a little bit more risk, maybe Lyft is good for you. It's important to note that if this coronavirus clears up within about 6 to 8 months, these companies will survive and these prices will be much higher than they are today. Now I'll give a quick update of my public portfolio. I know in my last video I said I was gonna wait a week, see what the market did, but the market just crashed a whole lot really quickly and I ended up buying some stocks on Monday, Tuesday, and Wednesday, but I did not buy any today. So looking at the orders I put in, I bought 10 shares of Facebook on Monday at about $153, 100 shares of Carnival Cruise Lines at $1235. I put in a sort of duplicate order by accident shortly after, but then I sold it again for a profit. And then on Wednesday, I bought 10 shares of Disney at $86.50, 200 more shares of Carnival. I got some as low as $8.50, 10 more shares of Disney at $82, and 10 more shares of Facebook at $140. All told, I have about $59,000 of cash left, so I spent almost $40,000 or 40% of my account on stocks. I'll show all my account holdings here. Everything's in the red. Disney's almost positive, but today I was up about $1,300, but the entire account is down about $12,000. Hopefully the market has not bottomed. I want to put about $20,000 to $30,000 more dollars into stocks before the market bottoms. And you know I'll be looking at Uber if it hits that $15, $16 mark. Other ones I'm definitely interested in loading up on are Disney and Facebook. My Carnival Cruise Line position is pretty much full at this point. I'll do maybe 1 or 2 more buys. That's it for this video, guys. Thanks a lot for watching. Hope you learned a lot about Uber and Lyft stock. What do you think about both of these stocks? Leave it in the comments below. Are you gonna buy Uber, Lyft? Do you think both of these companies are gonna go bankrupt? Let me know in the comments below. As always, leave a like if this video helped you at all, and remember to subscribe if you have not already. We're at 70 subscribers right now. Please share this with as many people as you can. Let's get to 100.